It's basically the first budget for the new government. While it might be in continuation from where this government actually left off, last year was a big year of expenditure. So this year the entire expenditure from the government side could be extremely muted. So our sense has been that market's expectation, given where the fisc is at this point in time, government may not have too much of space to expand its balance sheet into 2020, financial year 2020, which is essentially the reason why expectations are running extremely low at this point in time. I mean, from a budget perspective, I don't think this is the one event that you could actually take a call on what sectoral biases that you need to go through in one's portfolio. If at all, one needs to have a bias towards being positive or negative on the budget. You could effectively participate with an event with the passive fund itself, rather than trying to do something very active at this point in time. In either way, one educated guess, if one has to take an educated guess, one could actually put money together in a sector or a segment of the market that you would probably like. If you ask us as a portfolio manager where our capital is positioned towards, irrespective of what happens in the outcome of this entire budget, we do expect over a period of the next entire decade or some larger part of the next decade, India as an economy will move back into a capital spend mode. And everything that's got to do with the capital spend mode into infrastructure, capital goods, will participate with the economy. There will be a lot of efficiency throughputs that will come in this time as the economy expands. We're basically positioned out there to capitalize from this space. We also have a very narrow vertical where we're looking at some of the larger companies that cater to bulk distribution in the rural sector, in the rural part of the entire economy, more or less targeted towards capex in the agricultural sector. That's essentially the two large positionings that we as a portfolio manager have. But I just like to put a caveat. This is not based on the current budget or the expected announcements in the budget. I think the LCCG tax, or the long-term capital gains tax, was just about introduced last year. And there hasn't been any significant gains from a government point of view. So our sense is that the difference between short-term capital gains and long-term capital gains tax will continue to remain where it is for some period of time before the government does a rethink on this structure itself. I think going into this budget, one message which very clearly would help this entire economy is if the focus of the FM is to make expenditure productive. I think as we look at expenditure going into the remainder part of the decade, we need to make everything that India being a capital scarce economy, we need to make everything. We need to make every spend that we have reasonably productive, and every time we do this spend, it has to have a multiplier effect in the economy. That is probably the only way this economy can actually grow significantly larger than the limited resources that we have at our disposal.